And welcome. This is Mary Ellen McGonagle with your weekly MEM Edge show, brought to you each and every Friday afternoon. This is the show where we bring you where the action is in the broader markets. So without further ado, let's take a look at what we're going to be covering today. As usual, we will go ahead and review the markets. It's been quite a week, certainly not constructive, and we will take a look at where we stand into the close, and then of course take a peek further behind the curtain, if you will, get into some of the sub-industry groupings and get a feel for what's going on there as well. Earnings surprises, and yes, believe it or not, there were some significant earnings reports that did come out. And I say surprises because there was certainly, from my work last week, a hope, if you will, which is not the best emotion to have when relating to the markets, but I was looking for earnings to potentially provide some stability, but unfortunately not the case. And we will get into that because we are just in the beginning stages of the earnings season. So take a look at what occurred and what we can look forward to. ETFs of interest. I am going to share with you some of the reverse ETFs, but other ETFs as well that are holding up for those that may have an interest in dabbling, if you will, in this market. It's certainly not a time to put a lot of money to work, certainly, and we will get more into that as we move on. And then I'm going to share with you this 10-year super cycle in commodities. And this is something that Goldman Sachs first identified last fall, and then it really picked up over the last week or two. There is vibrancy in that area. I'll share with you just what that is all about, and commodities as a hedge. So that is what we will be covering today. Also, we will hopefully have time to take a look at what occurred the last time the Fed entered a rate hike cycle, if you will. There were, I have the top 10 stocks from that period, and it's all about 2017. In December of 2016, the Fed did begin that cycle. So hopefully we get time. I will share with you. It's something, if we don't, I will get to next week, because there is certainly relevance relative to where we currently are in the markets. So from here, let's go ahead and take a look. And here we are with the S&P 500. This is a daily price chart. I'll just go ahead and blow this up a little bit for you. And actually, this particular is not correct. So we can see that the S&P 500 did in fact break below that 4,500. So for those of you that are subscribers to my MEM Edge report, you'll know that we have been targeting this 4,500 level as the next area of possible support for at least 2 weeks now. It's a very critical area. And the concept that once we broke below that level, your next area of support would have been your 200-day simple moving average. And we did break below that support level this week. So we are not faring that well. Certainly, I'm sure a lot of you are feeling the pain. The S&P was down 5.3% for the week. We do have one other area of support as the markets continue to struggle. We can see the RSI, that's that relative strength indicator, and it did enter negative territory last week, has further deteriorated, but we are now in what's called an oversold position, and that is when it breaks below this 30 level. So we are at 27-ish. And really, you'd have to go back a very lengthy time. I am going to cover this further in my MEM Edge report this week, just because an oversold position on the RSI is not terrifically common, but what we can look for coming out of that oversold position, it can be quite powerful. And then down below here, I do have the MACD. I'm just going to take a second here and modify that so that we have the full stochastics. This is a faster moving momentum indicator, and one that I use on the indexes as well as on industry groups. So here we can see the stochastics are also in that oversold position below this 20 level. And certainly in negative territory, but this is something else that I will be covering as it relates to what we can anticipate and be on the lookout for as the markets continue to try and find a floor or a bottom here, of course. So from here, I do want to share with you a look at the NASDAQ. The NASDAQ did enter into a corrective period this week. Going to pull up a little bit of a larger chart here, and we can see from this peak in price here on November 22nd, we can see that we've had a couple of rally attempts and then significant deterioration. The NASDAQ is now down 15% from that peak in price. Of course, that 20% number is a bear market, but the NASDAQ down over 7% this week. And then also these outside momentum indicators, we can see that the RSI is also in that oversold position. And I apologize, I am going to very quickly pull up those stochastics because, again, they are quite useful and powerful, if you will, when looking for guidance with these broader markets. So here we are with the NASDAQ also down here below that 20 level and heading lower. So we can see that the NASDAQ really of the indices has been hit the hardest. This is something we have been talking about on this show and certainly in my report as it relates to the high growth stocks in the NASDAQ being negatively impacted by higher interest rates. And certainly the prognosis, there were analysts that came out this week and estimated that we may see as many as 8 interest rate hikes. That's definitely an outlier. The more average is looking for 4 rate hikes this year, which certainly could be very impactful. So let's go ahead from here, and I want to take a look at these sectors, the 11 sectors underlying within this S&P 500. I've added an RSI, that's a relative strength indicator. So we're going to take a look at these sectors. This is a 2-month daily price chart view, and we are going to take a look at the RSI in descending order. I'm going to go ahead and update this again, just so we have a better feel. And we can see energy is up here in the forefront. However, it did close the week down from this peak. Going into Wednesday, we were flat, but then as the week progressed, we did see a pullback in the energy sector. As we go on, I'll share with you oil prices and then other dynamics. This is all part of that 10-year super cycle in commodities, with energy being very bullishly viewed. But of course, as they say, trees can't grow to the sky. We certainly were due a pullback given this oversold position here. The good news on Friday today is that buyers did come in on the dip. So we're going to keep a close eye, of course, on energy. It's the one area that I've been favoring here of late. And then other areas up here in the forefront showing relative outperformance. They were negative for the week, but certainly not as negative as the broader market indices. And we can see it's staples, utilities, and then certainly financials are up here, but they were very much a laggard this week, but more tuning into the staple and utilities areas. These are certainly higher yielding and more defensive in nature. As we progress down to some of these other areas, we would be remiss to not take a look at this technology index or sector. XLK is the ticker symbol. And we can see we're just here at that 200-day simple moving average. And we can pull up a weekly chart to get a better feel really of just how down and out in the near term this industry group is, with that RSI turning negative. And hate to say it, guys, but the only 2 times in recent history we've had that RSI turn negative on the weekly were preceding bear markets. So not looking particularly good there. Let's go back and take a look at some of these other areas, because you really want to make sure, hopefully either you have hedged or you are more in cash than not. But I did want to share with you XLY. This is the consumer discretionary. A couple of factors at play here. We did see last week consumer sentiment dipping, We also saw retail sales in December down quite a bit. So that is really hurting this particular industry group. Inflation is still very high. And there is a sense without the stimulus that we did have in the way of government checks not in place, we could see continued deterioration in consumer discretionary, big volume on today's break below the 200-day simple moving average. The only possible good news is we are in an overbought position, so at some point we would expect some sort of a bounce, but by and large, discretionary stocks are down and out. So let's move on. I do want to share with you beyond these sectors and drill down a little bit further. So we are looking again at that 2-month daily price chart view, and these are sub-industry groupings that are very telling as far as what's taking place in the broader markets. So first up, again, that RSI indicator, descending order, and we can take a quick look here at Brent crude oil, and it was up this week. We are now up at that 87 level, super high. Analysts, again, Goldman among them, are calling for $100 per barrel oil pricing, but that's through the end of next year. We're a little bit ahead of ourselves here, but certainly energy. And this is something I talked about in StockCharts, my review of last year, as far as what the most impactful event or sub grouping that really impacted the market. And this is what I talked about. It was about the interest rate. We did have this spike going into March of last year. I'm just going to pull this up because it definitely bears repeating here. So from February into the beginning of April, we had a significant uptick here in interest rates. This was also inflation related and Fed speak. We can go back to this September into November, and each of these periods, two things did occur. One is energy stocks really had a nice run. We were able to capitalize on that, but also technology faltered. So that was certainly my pick as far as the most impactful, because technology and energy, as well as financials, during this rising rate period, financials fared well. So in my view, the most impactful, and we can see interest rates now, they did pull back this week, but by and large, on the upside as far as the interest rates, and certainly with the Fed's potential rate action due to take place in March, potentially, is what's being called for. So from here, let's go ahead and move on, take a look at some of these other areas, because unfortunately, I talked about higher interest rates being beneficial for banks. This is KRE, the regional banking ETF, and it took quite a tumble, down 9% this week. And this is where I did mention in that beginning segment that earnings reports were a big surprise. Bank stocks are the first in the earnings reporting cycle. They are the first to report their earnings, and a number of bank stocks came in and talked about high expenses impacting their bottom line. So not so great on the earnings front, so that spike in interest rates is not able to override that interest rate scenario. As we move on, we want to take a look at some of these other areas that had been holding in well, and this is semiconductors. SOXX is the ticker symbol, down almost 12%. And I will share with you, as we are on this topic, as it relates to earnings, we did have a mega cap semiconductor stock report earnings last week. This is Taiwan Semi. They came out with good numbers, but more importantly, a super strong prognosis as it related to chip shortages and growth going into this year. So we did last week have an initial spike in price. It held in fairly well, but here again, earnings in this particular case are not being we did have other subsequent reports this week that were not as bullish. So overall, we can see that semiconductors are very much in a downtrending phase. Next area of possible support here at that 200-day simple moving average, of course, a big component of the technology sector. So let's move on, because I did want to share with you again, and I do this each and every week because it really bears a close look. This is IGV, the tech software ETF, and I've been talking about this really since this November period when the group began to deteriorate. This really was the beginning of, for instance, the NASDAQ peaked in price here, technology and so forth. It's a big part of tech, very, very impacted by interest rates. So as interest rates rise, this group will fall, but not to this extent. We are seeing very, very severe, if you will, deterioration, and it's continuing. This is one area that I do have a watch list, because when the group does turn, it can really move. But unfortunately, we are at this period where it will take quite a bit of time to repair this deterioration. And this is that high interest rate period that I talked about earlier. We can see that software got hit at that point in time, and then again in that September period, but certainly not to this extent. So, but hopes again still holds strong. I do have my watch list is now down to about 3 or 4 stocks, and I will share that with you, because as this market is in a period of deterioration, we are certainly in a correction close to bear market status. You do want to, at some point, start cultivating your watch list so that when the markets turn, you can capitalize on that. And I will share with you ways that you can put together that watch list of stocks. So from here, I am going to take a brief break. And when we get back, I'm going to look at ETFs, what happened in 2017, and lots more. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I am going to share with you ETFs. Now, this is not an ETF that I would dare have you look at closely, but it is more for informative purposes. This is the ARK Innovation Fund. Of course, a big winner last year as innovation really moved to the forefront in light of the pandemic. And we can see this year it certainly is struggling. Kathy Wood's, several of her funds, unfortunately. So what I did want to share with you, this was a segue into those ETFs. So I'm going to share with you an ETF that was started relatively recently, and it is an inverse to this ARK Innovation Fund, and it is shorting the positions that are in this fund. Let's see if I can get a little bit of a better view here, but certainly I believe that you can see what I'm seeing, that it is in a very clear-cut uptrend here. It has not been in existence long enough. We only have a 5-day simple moving average, but certainly trending upward. Any kind of pullback could be of interest here to this Tuttle Capital Short Innovation ETF. But from here, let's go ahead. I spoke earlier about oil prices and energy stocks as well. So I'm going to share with you a couple of these, what are called ultra ETFs, where it will trade 2 to 3 times relative to a basket of securities. So in this case, this is Bloomberg's crude oil ETF, and it is 2 times crude oil pricing. Now, we are not early by any means on this ETF. It is more, let's just go ahead. I was going to put in a different moving average in there, a 5-day simple moving average. And then from there, what we can do is use that as a guide. So when these faster, whether it's stocks or ETFs, we can certainly go back to that interest rate spike period here, September into November that I spoke of before, and use that as your guide. As a pullback to that 5-day could present a buy point. The only thing at this point in time is we are a little bit overbought, and we can see that the MACD is up here trending higher. So let's move on from here and take a look at some of these other potential ETFs. And this is going to have a lot to do with that concept that I mentioned as it relates to that super cycle, that 10-year commodity super cycle. And this is agricultural ETF. DBA is the ticker symbol, Diversified Agricultural Index. And certainly agriculture does fall into that commodity basket relative to corn and other soybeans, etc. And so we can see that DBA is poised to break out of a nice multi-month base with nice outside momentum indicators trending upward. A couple of other names that we can take a look at here. And first up, I will share with you, because we didn't really get into it, but small cap stocks are continuing to struggle, down 8% this week. This is IWN, the Russell 2000. So there is a triple inverse. Now, I will tell you, I've been following certainly the markets for many, many years. I do still work closely with a small cap hedge fund, and we have talked about using these triple. This is ultra short, triple the inverse of IWM. But again, we are not particularly early, but it is of interest. Let's just put it there, because when they do any kind of rally or stabilization in IWM, you will see a pretty swift downtick in this ETF. But from here, I did want to share with you one other one that caught my eye. This is Collaborative Investment Series. It is a trust, SOGU, and it is shorting SPAC, those blank check companies that are out there, so in a confirmed uptrend. So from here, I'm just going to take a look at a couple of other names that are holding in really quite well, more as an informative, because at this time, I did mention to you putting together a watch list. So I will share with you one of the criteria, or several of the criteria for me as it relates to putting together that watch list of stocks. And the number one criteria is you want to be on the lookout for stocks that are withstanding the downward pressure that is taking place elsewhere. And also, you do want to make sure that that particular stock is not a defensive name. I could talk about Procter & Gamble, a couple of other staples names that are holding in, Hershey hitting a new high, but non-defensive stocks that are holding in well. Now, this would not be my first pick, but it is an example. DAC is the ticker symbol. It is a smaller shipping company, huge growth, 2.5% yielder. They're calling for 123% earnings growth this year, 57% next year. So it has those growth characteristics. Shipping stocks did fare really quite well last year. We can take a look this March into this September peak in price. So they are coming back on. One other shipping name, we can take a quick look at it here, a bigger yield, 4.2% yielder, a little smaller. It's $800 million market cap, but again, big growth, 106% earnings growth outlook for this year. Let's take a look at a couple of other names, and these are going to take us back to the commodity space. This is a royalty trust, SBR is the ticker symbol, 7.9% yielder. Now, I would anticipate further pullback, but keep it on your radar, because we did get really big volume on this uptick here. I 7.9% yielder. It's all about royalty interest in oil and gas companies. And then an energy equipment supplier. This is Cactus Inc., WHD, poised to break out of a base, 3.5 million in market cap. So certainly one of interest. And then moving into a steel stock here, and let's see if I can, well, we're not going to, unfortunately, the ticker symbol is not correct as I knew it, but ConocoPhillips, COP, had this nice breakout to a new high, pulling back very orderly. This is what you are going to anticipate after this significant uptick that we have seen in the energy space. So I did want to, from here, take a look at some other names in that super cycle commodity space. And in particular, we can take a look at some of these copper stocks. There really are any number of areas that will and are anticipated to participate. COPX is the copper miners ETF, and we can see it did have this base breakout, pretty significant pullback. We'll see if it's able to find support at this 10-day moving average or not. Another copper related index here is VALE, VALE, and we can see it traded right up to this 200-day simple moving average, pulled back to this 10-day. So we're going to see if it's able to break back above that 200-day simple moving average. Southern Copper is another SCCO. We can take a quick look at that one as well. So also, this particular name did break up above this 200-day. We can see it pulled up these shorter term moving averages as they cross above the longer term. That's known as a golden cross. It's a bullish signal. So nice vibrancy there as it relates. Metals are expected to be the primary beneficiary of the move toward ESG to cleaner air, cleaner just communities, and this is a global move. So it is anticipated that this, again, cycle will last quite long. This is Archer Daniel, ADM is the ticker, pulling back, and it did get overbought certainly up here. So see if this RSI is able to retain its presence above this 50, but certainly one for your watch list, if you will. So I'm going to take a minute here and talk about earnings season, because yes, it is taking place among this otherwise unvibrant marketplace. And so we definitely need to pay attention. So what I'm going to do is share with you some of these names that came out with earnings that were above estimate, yet they dropped. This is CMC, Commercial Metals. The company came in with earnings 179% year-over-year earnings growth, although they were 32% above estimates, and the stock deteriorated this week. So this is very negative sentiment where the market throws out the baby with the bathwater, for lack of a better word. It is ignoring those companies that are coming in with constructive earnings. Next week, we have Microsoft. PCAR is holding up. They're due to report. So all of this is going to provide us more clues as to Lockheed Martin due to report, and so on, as to really where sentiment lies. But I think we are being given a lead. For those of you that haven't, use that link below. Trial my MEM Edge report. This Sunday's report is going to be all about where we are, where we can anticipate support, and what to be on the lookout for going forward. So everyone, have a great weekend. I look forward to seeing you next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.